It's the Managing Director of the World Gold Council in India, Mr. Somasundaram. Thanks so much for joining us here. Let's begin by asking you, what are the kind of demand trends that you're observing for gold in India? This is, of course, in light of the shifting focus towards financial assets. The government has tried to come out with a gold bond scheme. The jury's out on whether that's good or not. A lot has been said about how smuggling has attempts to curb it have worked. But tell us, what's the demand looking like at the moment? We're talking ahead of the wedding season as well.
Well, I would say that, the second quarter demand, which is what we have just released, it has shown a drop of 8% over the same quarter last year for India. There are specific reasons for that. I would think that it is less to do with financialization of savings rather than factors like increase in price of gold in domestic currency and the intervention of inauspicious period during this quarter, which has affected the buying in the short term. So we have seen a drop of 8% this quarter.
What about the ETFs? If the global trends are showing a muted response to these gold-backed exchange-traded funds, what is that situation like in India? Would you say it's following the global trend? Are the flows muted? Is it maybe an outperformer compared to the other nations? Are you seeing an improvement and maybe the investors looking at this product, which is fairly new for the markets here?
Yes. You see, the ETF inflows in the global market, particularly US and Europe. Okay, Europe saw inflows, and in the US we saw that the ETF inflows in the first 2 months were countered by an outflow in the last month. But Europe continued to see inflows. As far as India is concerned, we saw that both jewelry and bars and coins demand. For India, ETF is a very, very small market, very small. It's hardly $1 billion. But bars and coins demand and jewelry demand actually dropped. They've dropped this quarter despite a very good Akshaya Tritiya, and that's what I mentioned. One of the reasons is that the price actually in domestic currency was up by 8%, even though the global price in dollar terms dropped by 5.5%. That's one of the key reasons. The second one is obviously the intervention of an inauspicious period called Adhik Mas, which comes once in 3 years, and I understand from the trade that this has also affected the buying. We do expect the second half to be better, because normally second half tends to be better with Dhanteras and post harvest savings and all that. So that is what we are expecting this year also.
How has the scenario played out for Indian jewelry segment? Can you just talk to us about the demand trends that you expect?
See, one of the things about the jewelry sector, as you know, in India, 80% of demand comes through the jewelry, and it employs a lot of people, artisans, and and also quite a lot of organized players in this field. What we have seen is that with the introduction of GST and the introduction of other measures which focused on transparency, we have seen this over the last 2 years that certainly it has impacted demand, because people were a little concerned about PAN cards and the goods and services tax, also the tracking mechanism, etc. We did anticipate that this transition to a more transparent way of buying and selling gold will impact demand and in the short run, and that's what we see is happening even in the jewelry sector. So a part of the reason for jewelry's muted demand is also the fact that the industry is transitioning to a more organized trade.
Some more details on that. Indian rupee has been depreciating. How does that impact the demand?
Yes, as I said, it actually raised prices when the international prices were down. If you see the last quarter, international prices actually dropped 5.5%, but the Indian consumer saw an increase of 8% in the local price. And that's also one of the reasons for the demand remaining a little muted towards the second half of the quarter once the Akshaya Tritiya was over. So Indian consumers certainly we did a study a couple of years ago. We found that income actually drives demand. It's a more stronger influence on demand than price. So if income goes up by 1%, demand goes up by 1%. But if price goes up by 1%, demand does not drop by 1%, it drops by 0.5%. So that is the relationship between price and income. So income drives demand more than anything else. But still in the short term, price does play a factor. So that is what has probably affected demand in this quarter as well.
You know, my final question to you before I let you go, what has life been like post demonetization? Have the spending habits of the Indian public changed at all? Do people now want to hold less of jewelry as investments? Are they investing less? You're seeing this government go after black money. You got these new rules, like you were also talking about, beyond a certain amount, you have to provide PAN, etc. How have the spending habits changed?
Yes, the demonetization actually was another big step, which probably brought quite a lot of activity, economic activity, into the organized fold, more through banking and digital transactions. Yes, it would be fair to say that gold, which has also been quite reliant on cash dealings, has been impacted by that. People are now switching more to, we have seen this in a recent survey. There is the level of compliance in the industry in terms of definitely raising bills and asking for bills and making sure that you have, you pay, even digital transactions have all significantly increased post demonetization.
Okay, so that's the big change that you're seeing in the from the Indian public when it comes to gold as well as to jewelry at large. Thanks so much for joining us here on ET Now. We of course